Okay, so what's your call with high yields as we see a rotation?
So the move up in yields this time through 3%, unlike several months ago, has greater staying power in our view. And actually, positively, the steepening of the yield curve with this move higher really is sort of proof of the pudding there. And so for us, it really does signal a bit of a psychology change, sort of tilting away from high multiple technology, consumer discretionary sector we're underweight, and toward more sort of late stage cyclical type areas like financials and energy in particular, as well as healthcare, our third sector that we're overweight.
Julian, when you say it has more staying power, is that because of the underlying causes from your analysis or just the pattern that you're seeing?
There's cause and effect is definitely different. So, I mean, part of the issue, and your last guest near the top of the hour, with Italian bond yields rising, is it's not entirely obvious that the U.S. bond market is going to be that safety valve for risk off like it has been in the past. And that is definitely part of the issue. And the question is whether that's a consequence of a rise in inflation or less demand for U.S. Treasuries.
So if you're right, I have no reason to doubt you. If you're right about where we're headed here, what does that say for the proverbial value versus growth equation? Because we've heard again, time and again, value is coming back, doesn't come back. Is it coming back this time? Because they're converging, it appears.
It's come back over the last month. Obviously, this trend is something that trends in years, almost decades, if you will. Do we think that growth is over? Do we think that tech is an underweight? We don't. In fact, our work says that tech can have and has had these periods of underperformance. If they're not too severe, the rest of the market can actually do okay. And if you look at the last week, part of the head scratching with moving into utilities and consumer staples, even as the market, even as bond yields are rising, is really, in our view, just a reallocation of money, some of that being passive, mind you, but more symptomatic of trying to find places away from the momentum names.